Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am No FOMO Charts. Today is Thursday, April 17, 2025. It's about 7 o'clock p.m. Eastern Standard Time here in the USA. Quick note, the stock market is closed on April 18, 2025 for Good Friday and Easter holidays, so traders get a break this weekend. Next week is going to be wild, could be volatile. We have big earnings next week from Tesla, Boeing, IBM, American Airlines, Southwest Airlines, Amazon, Google, Intel, Chipotle is in there as well, just to name a few. Economic data, we have manufacturing and flash services PMI, new home sales, unemployment claims, durable goods, core durable goods, and existing home sales, in addition to consumer sentiment. Earnings season is continuing. Friday, the market is closed on April 18. A federal judge has ruled that Google holds an illegal monopoly over the online advertising business. This is Google's second antitrust lawsuit. President Trump is pressuring FOMC Chair Powell to lower interest rates. However, FOMC Chair Powell said the central bank will wait for greater clarity before considering any rate adjustments, and warned that Trump's tariffs would likely generate higher inflation and slower growth. After that, almost immediately, the market sold off on Wednesday afternoon. President Trump said the USA and EU will make a trade deal, and I'm hoping that's possibly within 3 months. And trade talk is progressing with China for a deal, according to President Trump. Eric Trump is a headline speaker at Consensus 2025 Crypto Conference in May. Kraken crypto exchange to expand with commission-free stock and ETF trading in select USA states for now, before their official IPO launch. So they are essentially trying to compete with Robinhood. Although I will say crypto exchange from Kraken has a better trading interface than Robinhood. So I'm actually looking forward to this if they do a nationwide launch. Technical chart events. These are not chart setups for trading right now. It's just what has happened and confirmed on the charts, 100%. And it's notable because we have death crosses on all stock indexes. S&P 500, Nasdaq, Dow Jones, and Russell 2000 ETFs all have death crosses. The 50 EMA has crossed under the 200 EMA, and that's a close signal for certain quantitative traders and system traders, such as myself. Gold ETF, all-time high price, uptrending for over a year. Natural gas, price is downtrended below the 200 EMA. 6 out of 7 Magnificent 7 stocks have formed a death cross on their chart patterns and indicators, the EMA. 50 EMA cross under the 200 EMA line. I'll show you that later. Now for crypto, it's also bad news, unfortunately. Total market cap, death cross with a downtrend in the price. Bitcoin is still barely holding on right below the 200 EMA price zone. Ethereum has been downtrended severely, over 60% down, testing its 0.786 Fibonacci price level, testing $1,540, 1,540. Ripple is testing 200 EMA price zone. However, there's a potential inverse head and shoulders pattern that could break bullish if support holds. Big if. And the market doesn't crash. Solana price testing under 50 EMA resistance. Cardano with the death cross early this month, April 25. Testing underneath the 20 EMA zone, downtrending. Dogecoin with a large downtrend, also testing a 786 Fibonacci around 15 cents, similar to Ethereum zone. Stocks. S&P 500. I just want to point out to people, because I am a quantitative systems trader, that the death cross of the 50 EMA below the 200 EMA right here is simply a close signal for when the EMA actually upcross. I want to make this clear to people, is that if the EMA upcross here in section A is a long open entry signal to go green, it simply means that when it death crosses, it's time to close that position, which would mean closing around here for a potential 25% profit on the index. It might have even stopped out a little bit 20%, 20 to 25%. That's what it means. It does not mean short blindly every single stock in the stock market or crypto. It just means close the open position that was open when the upcross happened. Now that that's clear, let's talk about S&P 500. SPY is still downtrending, and we got stuck below the 20 EMA here, and the price gap down. Tariff news whipsaw back and forth. We're heading right into tech earnings. So this is what is going to make or break the market now. If tariff news and earnings are bad, we can crash back down to possibly the 499 level or the middle point 518. Resistance is above 539 and 547, all the EMAs to the top side. Just watching out for that. There's still a chance to make it through here, because if we do have a tariff pause, this is my bullish case scenario. If we have tariff pause for 90 days and China and EU, Japan, for example, and other countries start making trade deals, Canada, Mexico, possibly. Trade deals, if tariffs soften and earnings are actually good, and if, like I said last week, if Chair Powell actually cuts interest rates one time at least this year because inflation data is actually improving a little bit, we might be able to hold some of these lows and make a comeback. It's possible, but we have to hit all those 4 check boxes for the market to really come roaring back as a bull. So that's why I'm just neutral right now. I'm bearish leaning, a little bit more neutral, and hopefully we just hold support above 494. A lot of indicators on from trading earlier yesterday. Nasdaq still in the downtrend below this trend line. We need to hold above the 433 price level. And if we see the death cross happen on April 9th. So still downtrending, very similar that we need to hold above 430, definitely above 407. If we lose those levels, then the downtrend is severely going to continue, probably down to 350 or 300 level. So the resistance, we have a gap right about 450 and 466 above. We're looking at Dow Jones now, still in the downtrend. Death cross just recently happened on Wednesday, I believe, or it looks like Tuesday, Wednesday. So this is actually more serious because it's more recent, after even the price has dropped approximately negative 13%. Remember, COVID in S&P 500, S&P 500 dropped about negative 36%. So we still, if this is the top of the market and we're about to bear market crash as hard as possible in the next 2 years, we're in the beginning stages of that if it's going to happen. So that's why I'm watching. Support is clearly marked here at 369. We have Fibonacci support at 387. Resistance above at 407 and 415. It's really up to earnings, the president, Trump, and the FOMC. It's like that triple trifecta combo of what are those 3 people going to say and do? What's the real data and the real law changes to see if we hold the support level or not. It's all about sentiment as well. If people just get scared of stocks or scared in the real world and they're just having a bearish feeling. We have some bearish sentiment, the highest ever since the pandemic in certain areas. So death cross on IWM and Russell 2000 in March, actually. So small caps actually gave us the warning signal faster. And still in this downtrend, and we're looking at this resistance below the 186 level, support at 170. I'm a swing trader. I'm just going to give it some breathing room here. It's a lot of room. It's 10%. It's a lot of volatility. But just let it move around. If it's going to come down, it's actually okay. Because if it's going to establish higher low or a W, it needs to come down one more time to get that bullish momentum, if it's even possible. If it's not, reject and go straight down to 153. Lose all those supports. VIX, thankfully, starting to stabilize a little bit, coming back down to the 26 EMA zone, which is about $29. Watching out for that. Still in the uptrend, however. So it is possible. High, low, higher, high, way up here. Higher low, if that happens to bottom out around 27, we could get another leg up on volatility if news is bad and the data is bad. Let's just quickly look at gold. and this is all I'm saying, is massive uptrend for gold. We've been in it for almost 2 years now. But this last pullback, when we're in a raging uptrend, the pullback dips are the play. And this is after the crash of when tariffs, I'm going to call it the tariff scare, and then we had the gap down for 3 days. Gold rebounded 12%. That's just incredible. I mean, there's two times leverage. Somebody could have made 24%. Somebody could have done green single leg long call options, try to capture this, or just buy GLD for an easy 10% pop. But now that it's up here, I just want to watch out. When it starts gapping up this hard, unless there's extreme emergency in the world, it's above that linear regression zone. And it just poked out the Bollinger Band yesterday. So just watch out for that, because when there's a pullback, it might be a little bit severe. We're still in the uptrend, however. Silver, just do this way, turn off all the indicators. Silver bouncing off its low of 27, bouncing way back to 3-2 Fibonacci level, $29. Still consolidating to the side, however. So it's stuck between $27 and $31, that midpoint around 29-ish. So going sideways right now. It's not a clean uptrend. Copper, as I said last time, want to watch out that copper, remember, bottomed out below the 200 EMA here. Is a beautiful trade. That was a beautiful trade. So a lot of equities bounced up off that low. It was wonderful. Natural gas, however, is pulling back, and this is what I'm talking about on the first page, the stream video, that even though there's a golden cross, I know, being a quant trader, that golden cross does not always work. So that's why I ignored that, and then I shorted natural gas. Or I did inverse ETF actually, but shorted it and then had a nice play and then closed that out. So I'm waiting for the next play on natural gas. Just wait for it, because it needs to have a clear support level or a clear resistance level. Anything in between, I don't really like trading, because charts do not work as well for natural gas. I need to see something big. And sometimes it takes months, 3 months, 6 months to form. As of right now, the only good thing I have to say about natural gas is in the weekly chart, this could be some kind of pullback. It's not quite a cup and handle, but after the W double bottom here played out, the 25%, we went 50%, double that target almost, and then pulling back to the retrace zone of almost a 618. So if it comes down to about $16 or $14, I might start to think about a bounce trade, because it hasn't happened yet. It might happen as early as next week. Okay, let's move on to, we'll just look at some of the Magnificent Seven just to show what the death cross looks like. Excuse my charts. Sometimes when I trade, it just changes every chart, the template. But we have a death cross on NVIDIA, is what I'm saying. Apple, death cross. Microsoft, death cross. Google, death cross. Tesla, death cross. Meta's the only one who doesn't have a death cross. And then Google has a death cross as well. So I'm not quite always looking at the oversold conditions, but I will pay attention a little bit to the momentum here, because especially, Google just had kind of bad news. And if we look in the post-market, a little bit of sell-off. We'll look at Netflix, not a Magnificent Seven stock, but they had a little nice 2% pop. Netflix is at $1,000 per share. They need to have a stock split to get people interested again. For me, this is just my 2 cents, my opinion, is that the subscription price is too high. For me, $17 to $25, $18 to $25 for subscription price for Netflix, a little too high for me, so I canceled my own Netflix subscription, unfortunately. And the $8 tier is acceptable, but some people just don't like watching ads. But Netflix is not really revealing their subscriber counts anymore. The only thing is, with all these Magnificent Seven stocks, is it's not only about the technicals, the earnings, the EPS, the revenue, any good bullish news. If they have it, they need to try to release it now to save their stocks. If they don't have good news, excuse the background noise, if they don't have good news, just have to let the natural market cycle happen, because we've been going up trending for 2 years. Back in December, we were like all-time highs in Nvidia and Apple. So a pullback, this is actually not pullback, but a crash is actually normal. It's normal. We cannot stay up here in the price like this forever. It feels good, but it only lasts for about like a week or two. So from 2022, 2023, all the way to 25, we basically tapped that 6-minute on Apple, went to the 382, and now we're hovering above the 50% retrace with the golden cross looming, saying, hey, if nothing good happens, we are going down probably. So watching and waiting for the earnings report. Okay, let's go to total. We do crypto, and then I'll review one profitable trade I had this week trading stocks, and then we'll end the stream video. Thank you for watching and following, supporting. If you like this video, you learned something, go ahead and click subscribe, hit the like button, leave a nice comment or request for next time. I really appreciate it. Appreciate every one of my subscribers and viewers. Total crypto market cap. This is what I'm saying. We have the death cross. It's bad news, unfortunately. Death cross on total market cap in April 2nd and downtrending severely. There's no signs besides the small, nice bullish divergence. We had this nice pop up after the tariff scare. But Bitcoin from all-time highs is down negative 29.55%, negative 30% discount relative on Bitcoin. However, the death cross is not always the end of the world. That's what I'm saying. It's not always a 100% short signal. There's still a chance with everything I said earlier about stocks and tariffs and earnings. If there's really good crypto news and earnings in the stock market, there's still a chance for us to get out of here. And there is a small chance we might have a upside down head and shoulders, which could be bullish. If this is true, Bitcoin can go up 14%, but we must break out very strongly with large volume. We have not had that yet. The 1.27, or excuse me, the volume down here has not been extremely bullish, only on a crash. So there is some secret momentum building. We had this bullish momentum setup on RSI, the squeeze. I'm starting to use the DMI again. It just helps me confirm trend in the price. We're still downtrending right now. And if once we lose this 2.5 trillion to 2.3 trillion, then I would say we're pretty much in trouble here. The leg down. The immediate intraday support is 2.6 trillion. We cannot fall below that. And then we have all these bullish targets. That's possible. Bitcoin gets set up here. Bitcoin on the daily chart, not death crossed, but barely hanging on just below the 200 EMA around 85,000. This is good. And remember what I said. One of my strategies as a quant trader is I'm looking for oversold extreme conditions. So I like to use Bollinger Bands and sometimes Keltner Channel, but also linear regression just to get me close as possible down to that bottom side here. It's happened almost 3 times, and Bitcoin had a nice bounce. So like I was saying for total is if we can hold directly for Bitcoin above 83,000, then we're in good shape to get one more leg up because we had this bullish divergence set up on the price. In other words, if we can hold above this trend line and actually break out above it, which kind of looks like it's happening right now in the yellow. If we can barely hang on above 84,000, we might get a chance. Push up at 87,000. It just depends on will people hedge and pile into Bitcoin enough. If we start getting some serious momentum, I would actually think that is possible to happen. RSI is in neutral territory right now. A little bit of subtle momentum here. Let's go to Ethereum. Bullish momentum. That could be easily canceled though if we have a tariff news crash. That's why I've turned into more day trading mindset. Ethereum, unfortunately, is down 60%. And this death cross for Ethereum actually came true, downtrending severely. So if the price goes sideways, we'll be in good shape. But if we keep downtrending, then probably need to keep shorting. But what I want to watch and caution people is it's already down so much. So if I hop into a short now, there might not be that much gains left. To get down to negative 95%, it's only 35% more down. With the majority of the shorting has already happened, in my opinion. So that's why I'm thinking there might be a little bit of bullish secret momentum. We see on the squeeze down here, this double momentum and MACD as well. RSI with the potential upside down and shoulders over here. And there's a little bit of a secret bullish momentum on the DMI as well. That's why I'm looking, can we get a bounce on Ethereum, 5, 10, 20% at best. XRP Ripple, this is the inverse head and shoulders that I'm talking about. It's subtle. It's tracking and copying Bitcoin, but this setup is notable because we're downtrending, potential setup. We're downtrending straight above the 200 EMA. If it's going to upside down head and shoulders, it's now. It's now. This has to happen. If it's going to happen, it's got to happen in the next 30 days or else we're in trouble on Ripple. It's rejected down, so short-term bullish, but the longer-term pattern for the past 2 weeks, 30 days almost, is if we can hold this level, just barely hold $2, hold this right shoulder, there might be a chance at a bullish breakout. It's not quite perfect yet. It could go 20% pop, because if everybody's bearish, we might be able to get a short squeeze here going on. We have to break and hold above 217. Maybe that'll trigger the short squeeze. So I'm going to be watching that very closely. And the best thing to do is not just draw a trend line, is Alt-A or right-click, add alert. I'll do right-click, add alert. And every time, add a custom alert, Ripple, potential bullish, head, IHNS, inverse head and shoulders, entry potential. Every time, right below 217, and let that go. Best way to get prepared for next trade. So I'm running out of time here, but Solana, we're looking at Solana. Remember one of my targets, $100 perfect trade going up to 50% retrace 134. Now preparing for the next potential setup. Let's go to logarithmic mode. And on this chart, 2020, I'm on a weekly chart, 2021 all the way to the top. That's still the 618. For 4 years, that 618 level has existed. It's just been sitting there invisible to the naked eye. It's been there. Somebody could have prepared that trade for 1 year straight. And this trend line is close enough. Getting me excited here. So now what we're looking for is the follow through. The volume. This week, it was pretty, the week hasn't ended yet, but the volume is not above average. That's the problem. The only thing that I like is this diagonal trend line. We just broke out of there. Very nice on an altcoin. So we backtest a little bit to 125. There's actually a chance we can blast up to 155. We need to hold the support definitely above 130. Support to the downside, 124 and 115. Got to watch out for that. Just sandwich it in there. But I do like this play. Even though it's death cross, there was that bullish momentum down here. I mean, this squeeze, very large. This is a 3-month squeeze. And the DMI looks like it wants to upcross. It looks like something wants to happen in the bullish momentum. Okay, let's do Dogecoin just because it's similar. Just a quick FYI, the old stock screener for TradingView is disappearing very soon. So if you need to save your scans and watch lists, screeners, just please do so. I don't really use this version of the stock screener as much as I used to. But I really love the TradingView app and system. One of the best in the whole world. So Dogecoin, we're looking at, this is the 786 level that I'm talking about, hovering above 15 cents. It's almost 16 cents now. But there's a chance here because if Dogecoin is this much sold off, for example, if it is 65%, 63% off, all it takes is just one long trader because we have triple MACD momentum, the DMI, MACD, and the RSIs here in a bullish momentum setup. Not perfect because of earnings and Trump tariffs, but there's a chance it could bounce 40%. It's visible on the charts. We could bring up a volume profile. Let's go to financial. No. Should be technicals, profiles, visible range profile. We can see there is support down here at 11 cents, but in the visible range, the next level up is that 21 cent range. So if we happen to hold 15 cents, 14 cents, we could bounce up to 20 cents. It's not impossible. So I might have to think about futures on that one. Okay, let's close off with a trade, a successful trade I had on Tuesday and Wednesday. I'll talk about Wednesday's trade. So I was day trading stocks right now, and I'm a little bit more in a day trading mindset because the news has been changing almost every weekend, every day, sometimes. So swing trading in the early days of April or March was more difficult and challenging. Day trading has been working out a little bit better for me. But let's talk about Wednesday yesterday. So profitable trade. And I'll just go over it very quickly. So we know this is the S&P 500 SPY ETF. We know on the longer term time frames, we hit the pivot, the Trump tariff pivot low of 483, had a nice bounce day, but it started topping out below this resistance zone of 446. So I started getting a little bit bearish bias here up on the top, because if it was bullish, we would have needed to break out above that to go higher in the upper 560s. So because of the news that was happening, started getting into a bearish mindset. So then draw the trend line in the morning. That actually lasted for more than one day. You draw this trend line. That works as a horizontal, and we can also draw this trend line, which is still valid until today. So I'll do this one in a horizontal. I'll do a different color. We'll do gray. We'll just use white, and then the support level. So I'm talking about this particular day, this session in the gray boxes. So what happened is I made a decision that woke up and I'm working, and I said, you know what, I'm probably going to do some day trading. And I waited for 30 minutes. And then I waited for an hour. And then I said, you know what, I'm just going to do patience, because I don't believe that this bullish, the next turnaround at 7 to 8 o'clock in my time zone was real, because I said, we're in a bearish pattern. Maybe people got excited about the good, I believe it was retail sales data, which means consumers were spending last month, which is good. That's fine. But I still believe we're in a bearish environment. And so what happened was I entered on a 5-minute chart, bearish, perfectly at the top of this shooting star. So I'm going to give just more detail of, there was this upside down head and shoulders. It didn't quite hit that target, but there's a trend line up there. Also, outside the Bollinger Band, it poked out this candle. There was just, it was a strange feeling. Also, it hit below the 200 red EMA. And then linear regression, at that time, it was, I believe it was sticking out as well. And pivot point. So there's like 2 to 4 indicators to confirm, okay, I'm going to go short. So I shorted down, and it happened to just randomly be the perfect spot for that day. So I'm just saying, sometimes just practicing enough, even looking at the London pre-market the night before, right here in the orange box, is a similar setup happened, right? We were downtrending, it hit a low, it bounced up, hit the 200 EMA, which is around the same zone, with a wick up here, and then it pulled back. That I just saw that pattern happen, and I've traded this pattern in the past. We're in a downtrend, so that any major test of the 200 EMA, unless it breaks out on high volume, might be the one, because we had a hammer candle, the second candle, and then I entered the short, and it was just nice profit, and closed that out. So I'm just saying, sometimes the the market rhymes with each other. And it just, the same exact pattern that happened just 8 hours the night before, literally copy pasted it and it happened again later. So sometimes it pays to just look at the charts, and all the paper trading I've done and research, quant backtesting, all of that matters as well. But just sometimes being able to recognize the system and the pattern that's happening in real time can make or break trades. There's also a resistance in the pre-market here, 534. So there's multiple reasons why somebody might have gone out there. And then we had kind of the surprise news, 10:30 a.m. FOMC chairman said the note about the tariffs. And then we had a massive crash the rest of the day. So just understanding that top-down approach from in terms of the charts, going from longer term to shorter term, understanding the trend is way more important of the price rather than what does the RSI say at this moment in time, because that actually didn't help me that much. Sometimes RSI MACD is not right. That's why sometimes I just ignore it for day trading. And then had a nice trade. Also, the risk was managed. Had the mental stop loss right above here, and then targeted down this zone, half the position, half here. Just a clean trade before the next leg down, the next trade. So thank you so much, everybody, for watching. Hope you liked or learned this video. If you learned something, go ahead and click subscribe, hit the like button, leave a nice comment or request for next video. Happy trading. Remember, it's all about process, system, control, and strategy. Thank you, everybody. Hope you have a nice weekend and see you next week.